Hey, Alpha fam, welcome back to another episode of Alpha Commission. I hope that you enjoyed last week's pumps in the market. Today we're going to go over stocks and crypto, of course. And you had a full week of pumpage, right? And of course, you're going to have to expect that there will be pullbacks in the market, and some of these might be more severe depending on how risk on your assets are. In the case of the stock market, we really are just seeing a general pullback. It doesn't really matter which index you're looking at. This is just a very typical pullback. It could even be considered a bullish pullback. We're not really at the point of anything to be too seriously worried about. Perhaps these pumps are getting a bit toppy, and so we'll just see if it starts rounding out a bit more. And of course, that could suggest that it's going to come back to its lows, right? But we're not there yet. And of course, when the stock market gets has a sneeze, then Bitcoin catches a cold, and altcoins basically are dying of the flu. And that's because they are the risk on assets in a macro downtrend market, which has just been relentless and punishing. The motto that we have on this channel is always be taking your profits. Always take your profits. Guys, I don't know how many times I have to say this every single episode. Always take your profits. And still, some of you I know are not taking your profits. When you get up to a new resistance level, you take profits, not small amount of profits, huge amount of profits. You take a chunk of your profits, okay? You made your money. Don't be greedy in a downtrend while going long. It makes no sense. You are basically in a lightning bolt to the downside. Don't hold on to these things. Take your damn profit. And guys, again, like I just want to re-emphasize how important it is to be buying at support. I know that it's scary, but look at this. If you had bought in support, you would still be in profit right now. Whereas if you waited for the breakout and you chased the green candles, then, you're underwater, especially if you haven't moved up your stop losses, right? To your entry at least, as we pumped along. And some of you guys, like you just FOMO in. You don't even wait for a pullback. You see this red candle right here? There was a nice pullback that you could have bought in on, but some of you just chased the green candles and you were immediately underwater, you know? And so, what do you do about that? Some of you panic in a loss, and then you buy back in on the next pump thinking that, oh, that was just a mistake. And you do the same thing. It has another pullback, and then you decide to get brave or something, and you're saying, oh, we've pumped so much, we're going to keep going. And you forget to move up your stop losses, and then you go to the movies or you have lunch or something, and you come back, and you're basically severely underwater. Well, what was it about this formation that I mentioned in the last couple episodes? Usually we only rise to our entry position, right? So, let's go ahead and just visualize this again. Here's the entry to this type of a move, right? And then we usually have some type of fake out down just to liquidate the longs. Then we have a fake out up to liquidate the shorts. And our height usually only comes, very close to our entry, and then we will continue down, right? You can see this here. Just consider this like an entry. We have this kind of downward move, and then we have this move up here. Very similar in price action right here, and then we continue down. Guys, I outlined this stuff for you, right? Here's the like little node there, down, right? Up, and it's very similar, and then you go down here, right? You can see this just time and time again, whether you even want to consider this one right here. Down and then up, very similar, and then it goes down. See, this is very similar. You can just see these patterns everywhere, right? And so when you're considering like how you want to take your profits, you heavily want to be taking profits around the point of this type of a formation's entry. Again, this is a downward market pattern. but it plays out all over the place, right? And when you look at these kind of consolidation areas, it's just a nice tactic to have, okay? So here we can see like there's kind of like this first node of consolidation, and then it kind of has this downward pattern, and then it pumps up, of course, to liquidate all the shorts, consolidates there. Look at this. How is this any different? Guys, I already outlined this for you in previous episodes. And if you guys aren't taking advantage of this knowledge, then I don't know, what the point is of you guys watching it, because I'm hearing people just suffering, but we went over this. We went over this. So you should have taken your profit here. You should have taken, the majority of your profit whenever we had these little, resistance areas and consolidations areas, because there was a high likelihood that we can continue down. And I told you guys, like a lot of people were targeting that, CME gap up here around $35,000, and I said we don't have to fill in that. You can go back in the video. It could just be, a lure. It could just be a trap. Sometimes we don't fill in CME gaps for months. You don't have to just think that that's, what you want to go. That's our stretch goal, right? That's our stretch goal. But more importantly, you have to pay attention to these type of patterns that get put in over and over again, and you have to be realistic about it, where, don't be too scared, right? When we're coming down here, when we do find support, that's where you buy in, and then you take your profit at the resistance points. And I went over the resistance points in considerable detail in the last couple episodes, so hopefully you did take some profit there. Obviously, YouTubers can't hold your hand or anything like that. So if you guys are, watching these videos to try to understand, how to develop your own strategies, just please be practicing before you put significant amounts of money in, and understand that anyone you're watching can also make mistakes. They can also be over bullish, they can be over bearish, and in some cases, a lot of these YouTubers and weirdo gurus and, coin army, idiots, like they are just like shills and stuff, and sometimes they'll be pushing you into a direction. I think that we were pretty clear here to talk about the different levels that, we could be reaching, which would be points to take profit. And then, of course, if we had stretch goals, that would be great. But you have to always be taking your profit. And I always do emphasize buy at support, especially on a confirmation of support. That would be best. But in my opinion, to be a little bit conservative, don't chase the green candles. Buy on major retracements. Like this is a major retracement, right? You could take that risk. It's just that in a downward market, as I've pointed out, this N pattern, which we went over in detail again in the other videos, this N pattern tends to occur before a continuation to the downside. And so personally, we've just put in an N pattern, in my opinion. And so we're highly at risk of taking a dump here, right? So if we're highly at risk of taking a dump, do you really want to be buying in at this point? You missed the move, okay? I mean, this could turn bullish. Maybe I'm wrong. This is just statistical. I'm not saying that this is going to happen or that it's not going to happen. I have no crystal ball. I don't have more information than you do. All I understand is the pattern that gets put on the charts, where we have this kind of lightning bolt shape, this kind of backwards N, right? And then it gets followed by a major dump, often with a little, N, at the top of it. And so just be careful, right? Just be careful here. You missed the move, right? In my opinion, if you didn't get in already, you missed the move, and then we have to wait to see what pattern forms next. And that's the whole point of, scared money don't make money, right? Because if you didn't if you didn't have any bravery when we found support after this dump, right, which was a pretty big dump here, if you didn't find bravery to buy in there and then take it out here, and then take your profit out here, um, what do you think? They're gonna just set up another one for you? Maybe, market makers will, but that was their that's their trick to liquidate people, right? So you either ride along with their dirty tricks. They're not like making another opportunity for you. In some cases, we can see how this, how on a smaller level, these patterns do tend to just repeat over and over and over again. Here was a major one where we did get kind of a pump. I mean, to be fair, this is more like this area. It's just upward. But you can see there was a down and up and a down. And then it came back around. So, just optimistically, maybe we just chop around here and, maybe we do something again and maybe, come and fill in that CME gap. And then maybe there's a dump. Like maybe there's another half to this. You can see this in summer also, right? Where we had something very similar, right? Here's kind of like the first consolidation area. We had this kind of scary down, scary up. We put in that N formation, right? And then what did we do? We chopped around again, and then we, went back up here. So could that happen again? You can see that it sort of happened here, right? These type of W type patterns, it can happen. It just we're not sure what the next move is going to be, and so just personally, I would prefer to be a little bit, uh, a patient to see what type of formation actually comes out of this to ensure that it's not one of these where you just have a massive dump, right? So what we don't want to see is something like this. You get in, and then all of a sudden it does something like that. But we'll go into this in a little bit more detail. Let's jump over to stocks because I think a lot of you, um, again, just don't really understand what's going on in the stock market right now. Let's go ahead and get some news on the table. So basically, we had some bad news today, and it's that the labor market is still extremely tight, as well as manufacturing actually ended up picking up pace in 6 of the major industries in the U.S. So what does that suggest? The economy is still overheating. It means that companies are still competing for employees, which means that wage inflation continues to rise, which is a good thing for workers. It's a bad thing for inflation because your wages, you know, well, it's not necessarily good for employees unless you're really a white collar worker. The blue collar workers tend to get the shaft, okay? But so we know we have a divided world, right? The haves and the have-nots. And so as wage inflation increases, it tends to benefit those at the top the most. And those at the bottom, their wages do tend to rise, which is good, but it doesn't rise as much as inflation. So while the white collar workers tend to get raises that do cover inflation, the blue collar workers tend to just get hit by it, okay? But either way, increasing wages for everyone contributes to inflation in general overall. Okay. And then, of course, if we also have manufacturing picking up speed in 6 key industries, then that means that the economy is nowhere near slowing down, right? It means that we have a lot of work to do, and it means that the Fed probably is going to continue to hammer us with increased rates, which is going to affect the markets negatively. It takes out the free money from the economy, which everyone always used to make fun of, the money printer, right? They're not laughing now like they wish that money was printing. Everyone mocking the money printing, right? Like, crypto is going to save us from these money printing. No, no, no. Crypto was pumping because of that money printing. You should be thanking them for money printing because that's literally what your profit was made off of. Everything else is just garbage, okay, in this market. Seriously, a bunch of Ponzi's and wishful thinking and garbage, and you were the direct beneficiary of money printing. Don't get that wrong. If you have some strange ideas that you were saving the world by using crypto or something like that, no, you were literally just skimming off of the top on this, big, global Ponzi scheme related to money and money printing and, low interest rates during, these different eras of higher inflation, especially when the Trump administration just turned on like $1 trillion of, assets just flooding the economy, right? And it just never stopped. Biden's turning it around. He's starting to fight inflation. That's going to be the goal of this administration. But should we expect that they're going to get a hold of that problem anytime soon? Well, these numbers suggest that it may be a bigger problem than just the PCE data, which had good news last week suggested, which is that manufacturing is still increasing, the labor market is still tight, and so there's a lot of work to do. All eyes will be on that CPI data that comes out on June 10th because that will be the next major potential shakeup moment. Moving on, I think that we can say that you know we we did have. Okay, just a second. Okay, sorry about that. Just one second. Yeah, I apologize. So there was a fire next door, and the tree that connects to my roof actually was on fire and acted as a bridge from the apartment building next to me to my house. And so there's workers working right now in my front yard trying to repair some of those damage. My house was fine, and of course this was a while ago, a couple months ago, but that building is just finally starting to work on the repairs, and so I just needed to check on something really quick. Sorry about that. What I was going to say is that you can see that the stock market moved down, of course, but one thing, of course, energy stocks are still moving up. Oil is still moving up. These things remain high, and so what does that mean? That means inflation, right? Right? You can't have, even if stocks move up, if commodities are moving up, also that means inflation. So of course they're going to continue to battle these things. And as I said, this was a relief rally. It wasn't a bull run, it was a relief rally, and we got some temporary relief. What can we expect in the future? Of course, there's uncertainty about the Fed's move, the next move, but we can be pretty sure that it's going to be 50 basis points, I believe. I think that today's indications suggested that maybe 25 basis points, which was kind of the hope of the market, isn't likely. And that what we're going to be seeing is probably more in line with that 50 basis points. And, we could have still the potential for a shocking 75 basis points increase. That would just hammer the markets, and, it could end up being a pretty bad month in June. But let's just see, okay? Some of these, quote unquote legendary investors are saying that we're in the fifth great bubble of the modern era, right? And that even housing won't escape this. This guy correctly predicted the housing crash, a decade ago. And so, people tend to listen to him these days, and he's suggesting that even real estate is going to be hammered by this, and that we are going to have a day of reckoning. And so, will any industry escape the hardship that we're experiencing in the markets? Not sure. We have even Michael Burry, of the what is it, The Big Short, and then some other of these big market gurus suggesting that there could be falls in the stock market which are greater than what you can almost imagine. Grantham and Burry are both forecasting, guys, this is new. This is May 28th. Are both forecasting that the S&P will drop by another 50%. Okay, another 50%. That's insane. Okay, and Rosenberg expects at least 20% falling, a fall from the in the benchmark index. Okay, so these guys, these are kind of top thinkers. They're saying 20 to 50% more pain in the market. Perhaps we could round that out to around like 30 or 40%, but it sounds like this is going to be a painful era going forward. And, if really the labor market is going to stay tight, and if manufacturing is going to continue to steam ahead, and if the war in Ukraine is really going to put that pressure on oil and gas and food, then we are going to see a sustained um, period of pain in terms of inflation, and then of course the Fed is just going to have to, work pretty hard to fight that, and that's going to really suppress the crypto market in particular, but also stocks, of course. And as you can see, stocks continue to follow just my LARP lines here. Um, I'm not 100% concerned about this yet. We did lose this support, so we're not bouncing off of here, but we have kind of a nice support area here as well. So maybe we do find our footing. Um, Not sure, but this could be the turnaround, and then I would expect us to actually come down to these lower levels. Just personally, that's what I'm kind of thinking right now. But let's see if we can get some bounce here. This is a little bit of a resistant area, so we knew it wasn't going to be easy to break this area. Uh, and if it takes a little bit of work and then the rally continues, well, that's okay. That's okay. It just means that it may have a little bit more work to do. Nobody ever said this was just going to be like a 6 days um, run. It could, have ups and downs. It could be multiple weeks that this thing plays out. And then finally, we'll have a clearer picture around June 15th when the Federal Reserve makes their announcement about interest rates, right? And of course, June 10th will be the preview with the CPI data. But I should mention that I've already said that the PCE data has already come out, and that's the most important inflation information. It was better than expected. So, now we have manufacturing and labor, and then we have the CPI, and that just all creates a bigger picture. But I'm still expecting 50 basis points out of the Fed. Something would have to go really wrong for them to increase by 75 basis points because they are pretty conservative. And 75 basis points would definitely shock the markets. Let's go ahead and take a look at some of these stocks just to see how they're holding up. Yeah, I mean, everything's holding up pretty well. I mean, obviously, these look like relief rallies. They're not bull runs or anything. But, they got some nice bounces, put in some lower highs, and there is a potential for, let's take a look at some of these indicators here. Just get the MACD on there. So Apple, Twitter, Nvidia, Tesla, Netflix, MicroStrategy, of course, Microsoft. So, these guys are still pumping. We do see some slowing of the momentum. Some of them are starting to slow down significantly, but overall, still in a good place on the daily. Let's go ahead and take a look at some of the RSIs here. And they're all looking very similar. This is kind of a pullback. It's not necessarily a breakdown or anything. You can see this. Or maybe there's another drive up, sort of like over here, But we seem to be experiencing a pullback in these major markets on the daily, or in these assets on the daily. And whether or not we can continue bullishly, that's questionable. But let's take a look at some other factors that might be influencing it. We do have the dollar. It seems to have found its support, right where I was suggesting actually, and pulling up. Is this going to be a lower high, or is this thing going to push back up? Maybe do something like this, kind of chop it out, and then really have a drive up. Not sure, but we are at this kind of point of resistance here. So let's see if stocks can find their footing while the dollar is slowed down a little bit. Volatility is increasingly dropping, so that's good for stocks. They're gonna have an easier time to trade the lower that this volatility drops, and so perhaps there's the chance with the dollar, pausing its pump today. That pump probably hurt stocks significantly, but anyway, with the dollar pausing its pump and the VIX continuing to drop, maybe this could be just a healthy pullback in stocks and perhaps another attempt, right, later this week. That bad news just added to it, and let's go ahead and look at some of these other indices. The S&P, Dow Jones, and the Russell. I mean, they all look pretty similar. We are getting some nice reactions off of the prior resistance, and so that's looking pretty supportive. Is it going to be real support? I don't know. We're gonna have to find out. But some nice reactions there, suggesting this may just be a pullback. Let's go ahead and look at UST dominance for crypto. Similar to the dollar, right? If it rises, that's bad news. And as you can see, it had a significant pump today, right? Very significant pump. And we're almost in those upper tiers that we had to add. This chart is very weird to chart. But basically, we had to add a new level up here because of how much we skyrocketed back in May. And we're now threatening to re-enter that era. Pardon me, that area. So if we do pump up here, it's just going to be devastating for crypto. It really just represents that money is flowing out of crypto, and of course they're just holding it in stable coins. But you know, this effectively is a dead market, right? Just anywhere in this range is effectively a dead market. And we really want to be in this middle or below, especially down here, in order to just be rocketing, right? So as we drop, that would be good for the market, but as we rise, it's terrible for the market. BTC dominance just continues to rise. We still see this target that I have here for around 50%, just based upon this kind of cup and handle. It's not a perfect cup and handle, but it's a pretty good one. And so, can we reach that area? Maybe, maybe. If we do have a range breakout, we could even see levels up here as you take the height of the height of the range. And then you can kind of see how this works, right? And then maybe a pullback, right? And then it could even pump more. So, who knows? Are we out of the woods yet? Maybe, maybe not. It looks like we're not, right? You can just imagine everything else is dropping. This is the dominance of the other coins, and just very interestingly continues to follow this pattern that I've marked out. Wow, look at that. I haven't looked at this in a while. It just continues to follow this pattern. So who knows? Maybe we get some type of relief rally eventually, as this kind of pattern tends to put in a V at this kind of like support, which tends to line up with some type of consolidation high prior to the formation. I'll keep looking at this one, but right now it looks like we're breaking down. Well, that's pretty much at support. So this pattern would just suggest that there's more time, that we're not likely to have a altcoin bull run too soon. ETH dominance just continues to drop. It's looking really ugly. It's really stressing its channels right now. You can see that it had bullishly stressed its channel, right? Or its kind of range that it put in. And now it's bearishly breaking down. I mean, you could even say it's having a full-on breakdown from what we've seen out of Ethereum before. This just looks terrible, to be honest. So Ethereum looking pretty bad. For Bitcoin, I've been experimenting with a new type of way of calling bottoms, I mean macro bottoms, but also like significant drop bottoms. And I back tested it, and it's working pretty well. Out of all of these cases, there's only, well, that one worked because it was immediately followed up. This kind of like a grayish color one. 1, 2, 3, 4, 5, 6. There's only 6 instances out of all of these lines. There's only six instances since I started measuring here, 2011. So over 10 years of data, there's only 6 instances in which my new method would have failed, and only one, let's see, I would count that as a failure. 1, 2, yep, 3, No. 1, 2. These don't count because those were in uptrends, so I would have just been holding the position. Yeah, so there's only 2 instances of a real failure, and then the other 4 would have just suggested where I should have added to my position, or where we could have had a nice bounce. So if I had gotten out of the market right here, I missed the opportunity to get back in, right? Like if I had gotten out right here, I missed the opportunity to get back in right there. Although this was a very dangerous area, so maybe I wouldn't count this one. So maybe only 3, but here and here I should have gotten back in. So out of all of this for 10 years, there's only 3 that could have been improved, and then 2, well, this one was a failure. But really, I had a signal just almost immediately afterwards. Yeah, that can't be a failure. There's no point in getting the absolute bottom. What was the pump on this one? 47%. Yeah, I would call that a failure. So only one instance of a total failure. Now see, we do have these areas where there is this is a 46% pump, and this was a 46% pump. But the thing that I'm measuring is not did I miss this move or not, because you can't catch every move. But what you can do is catch moves that you have indications. And in this case, let me see here. Just make this some kind of teal colored. Get dots. So I know it's just a thought problem. Yeah, I would not have taken this one. I just didn't have enough confirmation on this. I'm sure there's something that would have given me more confidence, but if I had gotten out here, or perhaps out here, I probably wouldn't have gotten back in until here. And so this was a failure, I guess. I'm gonna re-examine this. Now, the reason why it might not be a failure is that I had a strong buy signal here, and so I could have just held this whole way. So, have to consider that. However, if I had bought in here, I would have probably sold in this area, and then I would have totally missed this move. So this was a failure. I would have been hanging on to what I bought down here, so this wasn't a failure, but this was a failure. And then this one, I had buy signals immediately after, so that's perfectly fine. Again, same thing. I would have been holding on to that one. Holding on to this one. Okay, yeah, so in this entire era, like my new method would only have failed me once. Only once. In terms of longing. So I think I'm going to employ this method in the future. It's totally different than how I've been trading before. And it works on the daily or higher time frame. It doesn't work on the sub-daily. So it's really the bigger moves. And there might be the chance for some fine tuning to figure out these drops, which could perhaps employ some, intraday trading. But in terms of the daily and above, only one failure out of 10 years worth of data, which I meticulously went through. And so I'll probably start sharing some of these signals when I have them. I have to calculate them myself, and it's it's kind of a tedious process. So there is room for human error, which I make a lot of errors. But overall, this has been incredibly good. The pink ones here are not bad results. It's just where I would have added to my position using a different method. So the blue is using the daily, and then the green is using a higher time frame than the daily. And these the thin dashed green lines are where I would have added to my position, and then using the same method. And then the pink dashed lines are where I would have added to my position using a different method. So in this case, it's employing two methods. The pink dashed lines are just a backup method in order to add to the position, but it's not the major move. The major move are the green lines, and then the blue lines have slightly less confidence, but they were also significant enough to be important. Now, this method does not tell you when to get out of the market. It only is an entry method, and so I'll have to develop an entirely other method for getting out of the market based upon this strategy. But at least I have my entry strategy in place for when we have this bear market. And that's when, of course, you want to be buying, is during the bear market. And so now that I have my strategy, when we do enter these lows, potentially I'll be having these signals firing off. And what you can see here is that we did have one of these signals fire off right here, like actually literally on the wick. I just moved this over so that I could see the wick. And so this would have told me to actually buy, using this method, it would have told me to buy the bottom of that wick, like wherever I could on this wick, it would have told me to buy. And then that would have been a solid 23% move. And so this, I believe, was highly effective. Again, this doesn't tell me when to sell, and so you still have to apply your own logic in terms of selling. But again, this one also fired here, right on that wick. It would have told me to buy that. And that was also a 20% move. This one was, a 40 to 45% move, depending on how you sold. This one, of course, was a 100% move, and it actually told me to add to my position, and to add to my position here. And then look at this signal. So I got these signals. That would have been incredible. And then it actually suggested to me to add to my position here and here. And it also told me to buy here and to add to my position here, here, and here. So I'm going to be employing this method. If I get a new signal, I may not be looking at this every day just yet, unless we have another big drop. But if I get a signal, I'll tell you guys, and maybe you guys can be the beneficiary of that. Just understand that although I've backtested this for 10 years worth of data, that doesn't mean it's infallible, right? There is at least one case where it didn't work, and I just don't know if under different macroeconomic conditions, such as the Fed tightening, which has never really occurred in this 10 years of data, whether that could be a curveball, okay? And it also doesn't tell you when to sell, and you know the motto that we have here, always be selling. So just take your profit wherever you can, in my opinion. But yeah, let's see how that goes. I know that I'm spending a lot of time on this episode just kind of like amusing, but let's get some nuts and bolts on the screen. Let's go with the main signal that we had here. So as you'll recall, the last 2 weeks I was searching for a different type of signal, and that was this signal right here, where we had a dump and then we had a massive pump, right? It doesn't tell you how big the pump will be. I had no idea where we'll go. So the selling strategy is always my weakest point. I'm very good at entries and I'm very good at macro, but in terms of selling on any one move, I'm not the best resource for that. I will try to increase my strategy for that. I don't short, and so I think my mind just is not oriented towards that. Perhaps I should get a shorting mentality built up, and so that I'm more keenly aware of where I should be selling. But just for truth in advertising, I want to admit that while I did get out of the market here at $59,000, right? Whereas a lot of people rode this all the way down or halfway down. And so I did set my own standard after my friend Retta warned me around 62,000 to think about it. I did set my own standard at 59,000 and I did get out there. I'm not the best at exiting the markets on any one particular small move. In fact, I lost a significant amount of money because I told myself that we're not going above 53,000. I did the macro. I knew that we weren't going to exceed $53,000, and still I waited. Like, I don't know why that's my weak point, but entries and macro are my strong point, and exits are not. So don't use me for guidance on how to exit your positions. My motto is just take a little bit of profit, in fact, a good chunk at every major resistance. And I don't care about exiting the top. I care about, preserving capital. I've just been hit too many times in the past. That's been my biggest mistake, is just holding on for too long. And I understand it's a function of greed, guys. It's a function of greed. So yeah, we did have that signal. It did play out. The move played out exactly what I was telling you that it was going to play out. So this signal that I had been hunting down for 2 weeks, I said it was building up and we were probably going to see the same signal. And sure enough, it played out here. We got the pump. And then what happens after the pump, I don't know. That just depends upon the conditions of the market. So you can never fully predict what will happen next. But in this case, we're having a dump, obviously. So you would have taken your profit here, you would have taken your profit here, and you would have taken your profit here, which corresponds to, of course, those resistances that we had marked out. Of course, I had these zones on the screen. That's the CME gap up here. And then I suggested that there's going to be heavy resistance in this area. There's going to be really heavy resistance in this area. And look, we just got totally rejected from it, right? So always take your profit on those things. I did have the fib channel here, which suggested that, just based on historically how Bitcoin moves within these fib channels, that did suggest that we probably could have pumped as high as that CME gap. I did not believe that we could pump to 38,000. I did not believe that we could pump to 40,000. I believed that we were going to get rejected around, maybe we could wick up here to like 35,500, but I knew, by instinct that we were unlikely to breach this area, and that we also had this heavy resistance. And you can look back in the previous episodes, I had this area marked out as like just a high risk, which is why I was suggesting buying at support, not buying at the breakout, because this is just, we were building up our own resistance, and I've seen that pattern too many times in a down market, where we just come up to our starting point here, make this kind of U and dump, right? This backwards N, and just dump. And sure enough, that's what we did. I also had hopeful thinking, wishful thinking that we could fill in the CME gap, but it just turns out that we didn't. So maybe we'll make another attempt, or maybe this bear flag is just going to play out, and that would take us down to this area. And of course, I have these areas marked out as support where if we do drop, then maybe you want to take advantage of these price areas, 22 to 23,000. And then if we breach that, then maybe this kind of like 19, to 20,000 or thereabouts. And if we drop one more level, then I mean, I could potentially see, and this would take time. It wouldn't be a straight line. So, if we just follow the kind of pattern that we're putting out here, right? Kind of the bottom of it. And let's see, let me make this a line. Then perhaps the lowest that I could see is $10,000, okay? Like just realistically speaking, there would be a lot of support in that area. And so this would also be on a fib line. So, if you subscribe to those type of things, I don't believe in absolutes. I don't believe that it has to break down like this. I think there's politics and there's macroeconomy and there's war and there's all these different factors that go into everything. And so, do I believe that we're going to have an extreme bottom like this? I don't believe it. I'm not going to tell anyone that's the bottom. Um, that's another, let's say 70% down, from this pump that we had. And those thinkers in the stock market, they were saying that the stock market has another 20 to 50% down, right? So let's take the average of that, right? So, that's a 30% spread. And so let's add like 15% to the 20, right? So 35%. 35% down in the stock market would be doubled in crypto. Assuming that this relationship stays consistent, it would be doubled. And so what's double 35%? 70%. And that would suggest this $10,000 area. So what do I have in terms of my buy boxes? As you can see, I do have buy boxes to front run it at 14,000 and then just like apocalyptic times right here. I don't know what happened to this one, but I do have one there as well. Maybe I could bring this down a bit. And expand this one. But again, I don't have any like religious belief that we're going to hit these type of levels. Okay. In my mind, 25,000, was the price to buy. And this would have hit, my buy area perfectly here. And then I also had a DCA area up here. I didn't believe that 30,000 was going to be the bottom, but you also wouldn't necessarily want to miss that area of support. And that area of support did still give us a good run of, 8%. So if you DCA'd there, you still made profit. You could have made 4 to 8% profit. And if you DCA'd here, then of course you made, 20% profit. And if we drop again, again, I would just sell every bounce. This isn't really for holding. I think that it's better to trade in a down market than to just hold because you're going to make your money anyway, right? The thing is that you have to buy back on retracements, right? You have to buy back on significant drops. And so any significant drop of, you know, let's just say 15%, you don't want to buy every 5% drop. You don't want to buy every 4% drop, but you want to buy like solid 15% drops. Like that's a good drop to DCA in. And usually the market can recover that, especially if it's a 20% drop, it almost always recovers that. It always has a reaction rally. It always has a relief rally. Like whenever the market drops 20%, it tends to recover it temporarily, even if it continues on a downtrend. And so you can at least, I mean, this isn't financial advice, guys, just what I do. It You can at least break even on those things, okay? And I'm a flawed trader. I'm a better thinker. Some people, are better at teaching, or some people are better at theory, or some people are better at doing, and some people just have gut instincts and they have no idea what's going on, but they just have extremely great gut instincts, right? I'm very good at theory. I'm very good at conceptualizing all of these things, but I'm still, I still have nervous energy in myself. I still have greed. I still have doubt. I still have fears when actually trading. And so, one of the reasons for making this channel is because I am a continuous learner, and I'm trying to learn together with you guys and to keep my skills sharp and to sharpen my skills and to try to develop that almost kind of robotic type of thinking, these type of systems that I can, take the emotions out of the action, and so that I can become a better trader, right? Not just do TA my own way, which I don't like just copying traditional TA. I like to put theories together that make sense to me, right? I don't just like copying fractals that other people did, like harmonics, where just people like develop these fractals and then they just apply them systematically across the board. And while they may work out, time and time again, and there may be a good percentage of hits, significant enough to make it a trading strategy. Personally, I like to look at the macroeconomic conditions. And while I enjoy looking at all of those fractals, and I highly admire the people who can, apply those systematic principles of trading just really coldly, where it's almost interchangeable. Like, they take themselves out of it almost entirely, and they just like churn out cash, kind of like a machine. Um, I don't like that style of trading. I like being a person. I like the art of it. I like my mind to be on fire. And although I know I could just use a squeeze play strategy with EMAs, and I could just use a harmonic strategy, and I could just use any number of these just kind of like robotic strategies that you could just, repeat over and over and over again and be systematically good. Um, the reason why I have this channel, the reason why I continuously think of different weird ways of looking at the chart is just because I want my brain to be as flexible as possible. I want myself to understand the fundamentals of what all of those other methods are based on. I want my brain to intuitively understand the bases of all of those methods so that I can put together on the fly my own methods as needed. And even though it may look like chaos to some people, for me, it will just you know, continue to improve as it's been doing for the last year. Um, when I first got extremely serious about this after just, a couple years of just fiddling around, Robin Hood and, losing money and just kind of like winging it. I'm really interested in these kind of first principles of trading and just trying to figure it out and break it all down. And that's why you can see just all these different styles on my charts sometimes. And it's not entirely consistent because I'm trying to get at those fundamentals. I'm trying to get at those first principles. I'm not trying to employ any particular style. In the future, I might. That's why I developed that kind of back testing of the last 10 years. In the future, I may do that, and then I may give calls by that, but I only want to do that if it's as reliable as reasonably possible, right? Compared to what I see other people giving calls. If I don't feel that my calls are more confident or equally confident as the calls of people who have more experience than me, then I don't even feel like I need to be putting calls out there. Why I would just recommend you to watch their channel, right? But if you want to look at the breakdown of things, then that's what I'm doing. So let me take some of this stuff off the chart here, because we also have like this fib circle, and this fib circle, you can see it's kind of forcing us also down into this wedge. You can see here, we almost got out of that fib circle, but we broke down. It's like it sucked us back in. And so if we do have this bear flag printing, then it could potentially take us into this wedge, this kind of wedge trend where you use this fib circle and this kind of downward path that we're on, which really should be measured from the top. But I'm not looking at resistance. I'm just looking for how we're kind of bottoming. And if we do fall down into this area, then perhaps those, you know, perhaps those levels that we were talking about previously do make sense. And I can again just show you the fib circle where we kind of, skirt across it, and then we kind of like cut across these things. It's not a perfect science. It may not even be science at all. There's a little bit of woo involved in this, but you can see how we got deflected here and just curved all the way down. See how we got deflected here, curved all the way down. You can see how we kind of broke through this, but we still curved down, right? Off of that fib. And then we have this fib right here, and we seem to be doing it again. So that suggests to me that yes, we can get corralled down. We can get forced down along this kind of like curvature. And if it was only once that I saw this, right, then maybe I could dismiss it. But I'm seeing it 4 times. So as I develop these concepts, I just keep it in mind as a possibility. I'm not religious about it. I do see that these things don't line up perfectly. So, but you can see also here, right? It kind of curved up into it. This one kind of curved up into it. This one kind of like went flat along with it. This one kind of curved around here. Like it's hard to see, but you can see this contact point right here, this contact point right here. And what did it do? It just kind of curved along that curve, right? And then it crossed it, but look how it crossed it. It touched here, and it kind of curved up into it, right? So it looks like chaos at first, but there does seem to be something weirdly interesting about it. And you can almost imagine that there was another fib circle right here, and I just didn't have the fib line associated with it, right, on the chart. But you can almost imagine that there was one right there. And of course, this one did this, right? So, guys, like, be open-minded, but don't get distracted by this. Like, trading doesn't have to be this hard. I'm just making it extra hard, okay? As we take a look at all of these things. And part of that is just entertainment. We can look at some actual fibs here. Let's go to the hourly. And you can see that the actual fibs of this move, and here's the volume profile. The volume profile, interestingly, lines up with our channel, our kind of range that we had marked out. We busted out of it, and then we broke back down. And you can see we broke back down to the kind of point of control, and now we're at this kind of secondary point of control. I don't know what to call it. My friend Yent Lee, he knows all the terminologies for these things. I don't use this much, but I do find it interesting to take a look at. And what you can see is that you see this wick right here. Let's clean up the chart. See how our price action, and then we had this wick down here. You can see how we just came perfectly to that golden zone of the fibs from the low to the high. We came perfectly back to the golden zone. We bounced off of that. And then if you take this low to the high, look what we did. We came perfectly to the golden zone. So these fibs, whether it's fib circles or whether it's regular fibs or whether it's fib channels, right? That fib channel that I was showing you that we get deflected from, right? This one got deflected here, deflected here, here, here. And I would suggest that we probably couldn't have gotten above 36,000, right? Or 34,000 maybe here. That fib channel just has been like rejecting us. So these fibs do tend to work out. I'm not sure entirely why. Probably bots or just human beings have been following them so much that, for 100 years of trading, of stock market, that it's just everywhere in all of the numbers now. But look at us putting in a little bit of support right there at that golden zone on the fib retracement, just like we bounced off of it right here. But of course, we did get rejected from this kind of point of control, or we broke under it. So we lost our bullishness. That 30,000, 500 that we really wanted to maintain, we lost our bullish structure. And now we have to just see what's going to happen next. Personally, I wouldn't be doing anything. As soon as we broke the neckline up here, I would have just gotten out and then just wait and see, right? But moving on, we can also see this kind of macro channel. This is just interesting things to take a look at. But you can see this kind of macro channel, right? Where you kind of skirt along the top. There's kind of a midline. Sometimes you break under it, tend to stay above it. And look, we've broken down. And look, we're just like skirting the bottom of it again, just like we did back here during COVID, just like we did back here in 2015. It's kind of reaching down there. And I wouldn't say there's anything too special about this. It's just a different way of looking at it. I just like looking at these things, okay? According to this channel, we're not like breaking down or anything the way that we did here. We're just holding it. And so does that suggest that we could go sideways and perhaps work our way back up? Well, if you look at Bitcoin with this type of a channel, then it would suggest that maybe that's possible. Maybe that's possible. So just wanted to offer one perspective. And then there's, another kind of channel. You could be thinking of just like a shorter term kind of channel here. And you could see us potentially breaking down from this one where this is support and this is major support. But this was kind of like a crisis, right? Kind of that black swan event. And then that's just exuberance. And of course, this blow off top was just pure exuberance. But that this was kind of the real market, just anywhere in between. And what would that suggest? It would suggest that we are breaking down. And look at this. Ooh, I didn't notice that. This thing perfectly tagged it. Ooh, that's creepy. Yeah, because I had drawn this out. You can see perfect touch here, perfect touch here, perfect touch here. And so that was the trend that I drew out. But look at that rejection. Look at that rejection. It's almost to the dollar accurate. Both of these wicks. Holy moly. Look at this one right here. Almost to the dollar. That is crazy for a macro line. Yeah, so, and look, this whole price movement right here, also almost to the dollar, rejected before it broke down. So that's very cool, and this bounce, right? So it's very cool to see these type of things. Like, there's so many different ways to visualize these systems of, money, basically. But you can see that we broke down here, and then we tagged the bottom, we broke down again, and then we went on our way. Maybe something like that could happen again, where we break down again, and then we get on top and we go on our way. But who knows? Who knows? Or we could be spilling over. There could be, one of these, kind of harmonics being put in here. And, maybe we just come down to this, 20K, and then we go for it, right? Because if you look at it, really, that's kind of what happened here, right? Something like that. One of these kind of harmonic patterns kind of got put into play. And then we go. Oops, what was that? Right? Not sure what. Let's see, delete that. Let's see, what else do we have here? As long as we're looking at this stuff. We did have a downtrend, and we do seem to be just kind of bouncing off the top of that downtrend. So that's interesting. That's very interesting. We've come all the way down to the top of that trend. And you could fidget with this a little bit, right? You could even say like we nailed it almost precisely to the dollar. You can fidget with this one. But look at that. Just like we're retagging the top of that downtrend. I'm not sure what I would do with that information. Do I think that it's gonna like bounce back up now? I don't know. But obviously if it broke back down into this downtrend, that could be significant. And then we had this uptrend, right? Like early on, we were thinking about we could possibly have an uptrend. We broke down, attempted to get back into it, and we weren't able to carry along. But look at this. We have a perfect rejection off of this potential uptrend that we had. Isn't that so weird? Isn't it weird how these things kind of work out? I'm just exploring some ideas here. Nothing nothing too interesting about what I'm doing right now. But look at this. If we did have like 3 upward channels, isn't that so weird? Just imagine just kind of a base down here. Isn't that so weird? We're like right at the mid channel of if there was these kind of 3 channels stacked on top of each other, like pointing in an upward direction, we would be right at that mid channel. Isn't it weird how those things kind of work out? I'm just showing you how many ways there are to think about, these things because we had a downward channel and look how we're just bouncing right off the top of it. And then we had an upward channel, and look what we could make out of it. We can see the price action moving up these channels, but they also break down, right? They also break down. So it's just interesting how to visualize these things. And we also had the macro channels, right, where we saw this perfect rejection here and here. And that's just unbelievable how precision it was. But all of these ways of visualizing are just so perfect. Just amazing that the price action can move that way. And then let's see, what else do I have here? Look at this. All right. What was this one? Oh yeah, the radiating lines from back here. You see this, right? You see the support right here. So this is on top of it. This is bounced on top of it. This bounced on top of it. And then look, like we're just right here. Look at this. Look how amazing this is. Right? Look at this bottom right here, this like precision. And then look at this precision right here. And that just aligns with how this channel like was stuck in here. And you see this kind of bounced right there and right there. And, basically we had this point right here. And so just interesting, just interesting. I'm not sure what to make of this. Just if we broke down, perhaps that would suggest, that we could get to these levels. Let's go ahead and put those buy boxes back on. If we broke down, maybe that would suggest that we would bounce off of this area, maybe this area. I don't know if we could get down here, but it would take a long time if we were going to do that. This thing could take months to play out, however it's going to play out. We don't know where it's going to go. It depends on the Fed. For my origin, oh, look at that. Look at that. Right on the origin line. Oh, look how perfect that is. Right there, right there. Beautiful. Beautiful. Look at my alpha origin lines. This is just a set of channels that I've developed exclusively for this channel, and it just shows the origin, the history of this asset, and how the price has moved along these different channels. And just look how we broke down, right back down to that line. Right back down there. And back when no one believed me that we were going to have this crash, like I was saying, let's see. Let's make that golden also. Let's make it teal. You see the width of this action right here? Look at that. It's almost the same width, right? You take it all the way back here to this point, to the point of breaking down. Look at that. That point, right? Similar to this point underneath the yellow line. That point, and then all the way to the breakdown was almost the exact same width. And that's how I was able to project where the potential breakdown was, because I noticed that the momentum of the price action, even though we had a totally different formation, it was very similar. And I suggested that we would have that breakdown. And we did. And anyone who was listening to that kind of crazy talk, I mean, they probably saved their butts. A lot of people thought we were just gonna go on bullishly and have a new bull run. What does that say about down here? Not sure. Not sure. But that $20,000 level would line up with these ones. But we also have this kind of wick down during the Black Swan event, and that could be as low as 15,000, 14,000, right? Something like that. I'm not going to dismiss those concepts. This could possibly happen. If this had some symmetry to it, then maybe the bottoms have some symmetry to them, right? That's all I'm saying. I'm not trying to predict anything. I'm just saying that if there is symmetry here, there might be symmetry at the bottom also. And so that's why I have these buy boxes. Even though I don't think we'll ever reach these levels, I might as well have my buy boxes there just to think about it. I probably should move this one to the upside. On these higher levels, I bias to the bottom of those buy boxes, and to the lower levels. To the lower levels, I should bias to the upper side, just to make sure that you're able to get your purchases. No, that was just more back testing. Here's kind of a funny one. It's just kind of entertaining. But I noticed that we tend to put in some kind of banana-like patterns, right? Where these kind of bananas are put in, and then at the tip of the banana, it resets and another banana is formed. You can kind of see these banana-like patterns. And sure enough, we deflected into, I had this drawn out, and sure enough, we deflected because I just suggested, oh, maybe we'll make another banana. And we had this point and we had this point, so I just drew a curve. And then we had like this point here, so I drew kind of like a curve, just suggested like this formation of a banana might be printed. And look, we're bouncing like literally at the top of that. So just funny. It's just entertaining. Um, can I kind of straighten that out a bit? Straighten out your banana. Yeah. And what would that suggest? Like if we do this sort of thing, look, ooh, that's very similar, isn't it? That's very similar. Look at that. Look at this. See how it is when you like just look at weird stuff? Look at this pattern. All right. What if we just took this pattern and put it over here? Look at that. That's interesting. I mean, I don't know if there's anything to it, but and then maybe another banana gets formed, right? But if there is something to it, well, let's put that back on the screen. Then it would suggest that we might dump down to here. 22. Ooh, that's 22,000, 23,000. What's that confluent with, huh? Look at that. Look at that right there. Interesting. Hmm. Let's see if we put in some consolidation like we did right here. And if we get kind of a downward consolidation, maybe you want to just exit the market, in case this drop happens. But guys, this was supposed to be the funny thing. It wasn't supposed to be the most serious thing. But I'm suddenly feeling very serious about this banana shape. So very weird. Let's go ahead and check just one more thing. The old fractal that I had, and the old fractal. Wow, that looks very traumatic. But obviously it's broken down here. So, but it also wasn't that accurate right here. Let's see if we can just stretch this out a little bit. Maybe kind of an average. I don't know, maybe something like that. Maybe this could happen. Or maybe this really is what happened, right? Maybe that was the bottom. Just it's really hard to say. Really hard to say. You can't really use fractals, right? You can't just use fractals. But I just like keeping it just to show like how scary things could be. Just to remind myself to always be taking profit, and to not just think that things are going to pump to heaven. I like to have this fractal just to remind me that we could get into these crazy, scary areas like, 18,000 or 14,000, and that it is possible. And so, again, every time we pump to a resistance, just take a sizable amount of profit, and then at least you're not losing money, even if we continue in the downtrend. All right, guys. Hopefully, the surprise news that we had this week in terms of the bad economic news, or at least bad for inflation, um, hopefully that doesn't hurt too many of you guys. But we're just gonna have to play it by ear. We knew this economy wasn't going to be great. We knew it was going to be a relief rally. It wasn't going to be, the next bull run, right? Anyone who was being a moon boy telling you that we were just going to go to 100K, like just just block those people from now on. But we do have a lot of work to do, and keep your eyes open or your ears open for the news on June 10th about CPI data, and keep your ears open for the news from the Fed on June 15th in terms of the decision that they'll make. All right, guys, that was your alpha for the day. Stay safe and happy trading.